Well, good afternoon and welcome to the Moneytree Mastery Property Show, broadcast live every Thursday. There's occasional interruptions if we've got other stuff on, but we try and block this out as much as we can. So we're here every Thursday, 12:30 for an hour, talking about what's going on in the world, in the UK predominantly, but in the world of property, finance, the economy a little bit. We touch on that, and really what's getting the big market, what's going on in the market generally. So, yeah, real up-to-date stuff. And in today's show, we've got market updates, touching on the Renters' Right Bill, and is there really a big recession coming? That's the big question at the moment. It's been predicted it's the biggest recession ever is looming, but there's a lot of scaremongers out there. So we'll cover a bit of that, and we'll be bringing you some real up-to-date news. So, what's been going on in your week?
Oh my God, I can't even remember.
Well, you're prepared.
Well, I am. Lots of use of AI. I'm absolutely loving AI. I don't know about anybody else who's on this call. I'm just going to say hello to our international viewers,
Yes. Hey.
which is amazing. Yeah, AI, a big part of my day. Definitely. If you haven't yet launched yourself into AI, or you've been using AI just as a bit of a gimmick, but actually as a tool, the time it saves you is just outstanding.
Which
I'm
means
loving it.
which
I'm
means
going,
you're going to embrace the art of cooking and start cooking because you've got
no,
so much free
no,
time now.
I'm going to be spending
No?
that time
Okay.
doing other things. But yeah, just not enabling to get other stuff done, especially admin tasks. Loving AI. Haven't quite got to grips with automation and getting better will. But yeah, just admin tasks. Writing things, Facebook posts. Yeah, I'm loving
I
AI.
thought it was all your own work.
Well, no. Well, it is obviously, so input, output. I have to input the information.
It's funny actually because I've actually used it a bit more than ever this week, instead of Google a lot of the time because the results are more comprehensive.
Yeah. Yeah,
So
Google and Gemini are attached
yeah, I've
anyway,
been
aren't
I've
they?
been I've been on Gemini, but even so, if you put the same question into Google as you do into Gemini, you're going to get a far better response, more detailed response out of Gemini.
Yeah, so loving AI. I really cannot, if it disappeared, oh my God, I think I would be really lost. So
Yeah,
yeah,
I'd be in trouble as
a
well.
big advocate for AI. So if you haven't yet tried it, or if you haven't yet tried it in a business sense, instead of writing poems or little things, then yeah, really try it. Treat it as an assistant. And yeah, back running. I haven't done that for about six
Back
weeks.
running. Let's put that in perspective, shall we? You've run once.
Yeah, but I have also signed up for doing park run. Um,
When's
so
that?
I haven't actually met anybody else that does park run. So it's Saturday, it's national. So it's a charity organisation or organised by a charity, a non-profit, maybe non-profit is
Not for
more,
profit,
yeah,
yeah.
that's it. So 9 a.m. somewhere in the UK there will be a park run. So yeah, I'm going to do my first one Saturday. I did intend to do last Saturday, but I woke up at 8:10 and had to be there at 9, so that was never going to
You
happen.
must have needed the old beauty sleep then.
Well, of course. Yeah, so I ran last night because I thought it'd be a bit foolish to sign up for a run that I hadn't run for ages and ages. Yeah, so looking forward to that. Looking forward to getting back into it. And I've never done a run with a group of people before. I'm usually just a solo runner. So yeah, that'll be interesting concept.
That's actually reminded me of something we need to discuss. Because I said we're here every Thursday, 12:30, but I've been earmarked to play golf next Thursday at a big networking event. So you need to substitute me.
Oh, okay. Well, maybe put it out there then. Find
So
us
if you fancy being co-host or the main host with the co-host,
oh my God, that'd be so much fun. Yeah, please tell
so,
us if you
yeah, fancy being part of the team next week.
Amazing.
Fill my shoes. It's a bit of a worry. I might not ever be welcome back. There you go.
Yeah, if you want to be my co-host for an hour next Thursday, I'm well up for that.
So yeah, bit of Q&A, bit of up-to-date news, that sort of thing.
Yeah, if you fancy it, let me know.
And yeah, we can
Put it in the chat, or if you're watching
what-
it on replay, then yeah, let me know.
so we can do a bit of
comments.
research on the statistics of the views compared with me at the helm,
Oh, goodness.
or my substitute.
Yeah, that's
who gets the most views. That'd be funny.
That's a really, really good
Or
show.
devastating. Yeah, so we'll see. I might have to play golf every Thursday.
So if you are watching us, so we post this, just so you know, anybody who comes on, it does go into our YouTube channel, which is Jacqui and Neil Dobson at Moneytree Mastery. So this will be uploaded into our YouTube channel. So there are past episodes as well. So we do turn this into a podcast. So you can either watch us or just listen to us if you're on the go. But if you want to know when the episodes, the new content has been posted, then make sure you subscribe. I should have one of those thumbs and all of that. A bell come up. Ding,
ding, ding, subscribe.
Subscribe. Yeah, and then
somewhere around this video.
You'll be notified when a new episode. But in the comments, if you are watching this on YouTube and you fancy being a co-host, please.
For a day?
Please let me know.
Sounds like I've been replaced already.
So much fun. Well,
put a nail in my own coffin.
Yeah, all your comments of what you'd like us to talk about.
Yeah.
So we are, property investors, we are networking hosts, we're coaches, mentors, we're business people, all sorts of, well, we're human beings as well. We have lots of emotions and cover lots of topics.
And we have a lot of fun along the way.
Yeah.
We do enjoy what we do.
If there's certain things you want us to cover, if you want to know how to raise money for your properties, if
expert
you
in that.
have got any questions about how to get those really great offers accepted, just let us know. Any hurdles that you're wanting to get over, then we are here to help you. So yeah,
you're looking very much like my PA with your glasses on your head.
I know. I know. And somewhere else to hop over as well, do a bit of networking. So we've got the Moneytree Mastery Facebook page, which is Moneytree Mastery Networking. Oh, I got it wrong.
Property network.
Yeah, thank you. Moneytree Mastery Property Networking Hub. A little bit of a mouthful, but that is a new group full of budding property investors, people that are done with just research and knowledge ingesting, and they're ready to go out, buy property. And I think now is going to be amazing, but we'll get to that in a minute.
The big question is, if not now, when?
Well, yeah.
The best time is now.
Always now. And there are always great deals to be had as well. Yeah. So Moneytree Mastering Property Networking Hub. Make sure that you go over there and become one of our founding members, because that is brand new. Introduce yourself in there. I have put a guide in there. If you're not sure how to intro into the group, then head over to the guide and there'll be some templates and things. And yeah, I want to get that as another networking interactive space. So it'd be really great to see you there. Right. So as I've mentioned, what is going on?
What's in the news? Well, breaking news. Here we go. According to research done by Moneyfacts, there are now more buy-to-let mortgage products available than ever before, with a total of, from what they've found, they've done a lot of research, 4,144 different buy-to-let mortgage products out there for you to tap into. And it's a significant rise. It's 42% more than there was this time last year. Yeah, so that's like this, that's 1,800 roughly. I hope my maths is reasonably good. It's about 1,800 more products available than there were this time last year. So that's, there must be one that suits you, mustn't there? How different can they all be? I mean, it can only be the fees, the terms.
Well, I suppose
the loan to values.
But think how they're funded, though. So this may be a new snippet of information. Not all financial institutions are funded in the same way. So some will have private funders. So they'll actually be people, just regular people that have got a bundle of cash in the bank and they lend their money out in the way of business. So that is actually how their business runs. They lend out money. And there are mortgage companies that maybe have access to maybe like 15, 20 of these, proper investors who they go. So we put our case together just like you would to a private investor, like we would go with a case and say, this is the property, this is the deal, this is what we do to it, and this is the final numbers. They will do exactly the same with our proposal. They'll put it out to tender to their bank of investors. So that's like private, investors, and Roma Finance work in that way, don't they?
I do, yes.
And then you have like the massive institutional mortgage, brokers as well. So they're like the huge people. So they're backed by banks and things. So yeah, so that's probably why there's lots of.
Yeah, I mean, we've
Lots of
used
different
Roma.
ways.
They're very quick, but they don't have a wide range of products
No, they're
because
very
of the
niche,
way
aren't
that
they?
the money they use, really. So that's yeah. So moving on back to the news swiftly.
Sorry,
We did go off piece there.
We did.
House sales have made a bounce back. So they bounced back in May with they went up 25% compared to April. So this is obviously as a result of the big dip was a result of the stamp duty land tax, but to bounce back and increase by 25% sounds hugely significant, but it was still 12% down on May last year.
Okay.
So, it's going the right way from from the lenders and the people buying them, but it's still down on last year. So 12% again, quite significant numbers these are. And this is really good for us professional investors, this piece of news. Ready for it?
I am waiting.
I did report last week that over 100,000 properties listed for sale have been reduced in price, many of them more than once. But there's a research done by Zoopla. They've just announced that more than 1 in 5, in fact, 22% of properties are remaining listed for more than 6 months. So they're not moving, they're getting reduced. And us as professional property investors and problem solvers, that's particularly good news because you're going to get a lot of motivated sellers. So this is where we go in and solve their problem. We make them an offer that works for both parties and help them out and help us build a portfolio at the same time. So if you want to find out more how that, obviously send us a message. We can find out a bit more. So that is really good news for us and everyone else in the world of professional property investors. So renters' rights bill.
Yeah.
It's not as daunting as we think.
It's not. It's just
If you really, people don't. We just embrace change because you've got to go with it. But it's not. It's not as daunting as people are making out. A lot of it is actually common sense, and a lot of it's given us the power back as landlords, giving us a bit of power in certain areas, and not the tenants. So everything's, nothing's going to please everyone all the time, is it? So, but timeline. It's the renters' right bill update. The report stage is now going ahead and being discussed through July. But because of they have to have a holiday apparently, so the House of Lords won't even consider it further until the autumn after that, and then we move into what's known as the ping pong stage.
So they play table tennis.
This is straight from the House of Lords. This is they call this ping pong, whereas they go back and forth with said changes until they actually go back and forth until they find a happy medium where everyone's happy. And this could take quite a number of months, I reckon. So they're now talking that we're looking at potentially last month of this year or early next year before it's actually implemented. So, it's and everything gets delayed, doesn't it?
It's just going on and on and on.
So we just got to. We've already sort of caveated some of the risk because every new tenants we get now, we put rent guarantee insurance on it, and it costs between £30-35 per property in the rental bracket we're in. But it mitigates that risk because if the renters' rights bill goes through in its current form, or more or less, tenants will be able to get 3 months behind in payments before you can do anything. And I know for sure that my mortgage company won't wait 3 months for their payments. So we've mitigated that risk by we now take our rent guarantee insurance on all new tenancies. So that's one way of it costs you a little bit, but obviously you've got to look at the bigger picture and look at any voids or non-payments, etc., to like I say, mitigate that risk. So yeah, that's really I mean, updates on the renters' rights bill is pretty dull really, because nothing happens very quickly, does it?
It's just
Months
moving.
go by and
the dates are just moving away all the time,
so
aren't they?
let's have a little bit of a fun fact, shall we? This is true. This is true.
Another true story.
It is another true. Steve Wright.
Yeah, so there's going to be so many people on here that
Don't even know because we're of a certain age
do
bracket.
not reference that at all. Yeah.
So, who was this report by? Report was by Churchill Home Insurance.
Okay, the nodding dog.
Churchill Home Insurance carried out a survey on properties that sold around properties that had got an excessive amount of garden gnomes. And in this survey, which has been going on for years, they discovered that on average, neighbouring properties are devalued by £12,000 because of the neighbour's garden having excessive gnomes. Now, I don't know how many gardens throughout the UK that have got excessive gnomes.
There's one near us, actually.
There is one in the corner of us, but actually devalues the properties around you. What about that?
That is so funny. So please put in the comments if you have got any excessive gnome activity in your area. I'd love to know about it.
Got a gnome from Gnome.
That's so funny.
Yeah.
Usually it's like noise, so pubs or takeaways or sort of restaurants. And now we have gnomes.
Yeah, absolutely. So let's move on to something a bit more serious. There's big talks about the biggest recession ever happening, and this is from Robert Kiyosaki, I believe, was the one that started this rumor, who's a bit doom and gloom anyway. But it's interesting because I was listening to a live this morning from a big player in the world of property throughout England, and his really good information he was giving. Actually, he's saying that in Chelsea and Knightsbridge, London house prices have dropped 40%. So they're back at the prices they were in 2016. And everyone says that, you know, the London has got an economy of its own. Well, they don't usually drop, and they've dropped significantly, but not in the outer suburbs. More actually, the higher end stuff has really dropped like a stone. So we're looking at nearly 40% in those two areas, Chelsea and Knightsbridge. So now's the time to buy. You've got a few million kicking about.
Is that because we have a lot of international investors come and buy that sort of property?
Yeah, and they're probably not too confident what's going on in the UK economy right now as well.
So that's a knock-on effect, isn't it? You can always tell what's going on.
And this chap was also saying that in the city where he actually lives, he's buying 2 commercial units 50% below what they were valued at 6 months ago. So he's buying 5 million pound units for 2.5 million each.
Yeah, that's Rob Moore, isn't it?
Yeah.
He's Peterborough way, isn't he?
Yeah, he is. But yeah, there's a lot of talk about recession, and you know, and as he pointed out, we all know that if you're in and around and in amongst it all the time, that you know, there's always winners in a recession, and we make sure that we're we're on the right side. There's always winners and losers, and we want to be the winners. So we want to be ahead of the game. So get out there, viewing, offering now. And don't panic. Don't offer too much. Put your offers out there and wait for them to come to your offer.
So you've been doing quite a lot of viewing recently, haven't you?
I have, yes.
New areas as well, tackling some
A couple of new areas, yeah. New council. Yeah, because we're focusing a bit on social housing. So we've tapped into a council where it really works and they're really in need. So we can provide, beautiful homes for vulnerable people. Really, there's the outcome whilst making money along the way. So it's a win-win for everyone. And I put 3 offers in this morning, and they were significantly below market value because of the amount of work they needed doing to them. But they weren't poo-poo. They weren't written off straight away. They're considering them. So, we're solving problems. And one of the biggest issues, or one of the biggest things I get told at the moment, because we invest in probably 4 different areas now, and all the agents are saying the same thing, that the only thing that's really selling anywhere near the asking price are turnkey properties. So not your new builds, but your fully refurbished, beautiful, nice houses, bit of character, ready to go. So they haven't got to spend any money on it. And the reason for that is predominantly the cost of the build, the refurbishment at the moment. My business partner was telling me he's struggling to get contractors on a day rate less than £350 a day now. And that's just ridiculous. So the bubble's got to burst at some point. So my advice to all you plumbers, painter and decorators, chippies, whatever you are, or your heating engineers, is price sensibly, and you'll keep your customer in the middle of a dip when everyone else is losing it because they're overpricing. If you do a good job for the right money, I think you'll be in business a long time.
Yeah, got to start thinking of further ahead, I think, isn't it?
Yeah.
There's definitely changes. So, a buyer's or a seller's market at the moment?
Not buyers.
Yeah, buyer's market.
Buyer's market.
And do we think it's going to last for a long time?
Yes.
We do.
Well, the recession, I don't think it's going to be a massive. I don't think it's going to be a hit you in the face recession, as in happen overnight. I think it's going to be a gradual, which means, from our point of view, you offer, you follow up, and you keep. If it's still on the market, you keep following up, and follow up. And as I said, because so many houses listed are being reduced, which means the vendor's going to have a more realistic feel for what they can actually get for their property, and that's when you become the answer to their problems.
And I'm just going to ask about interest rates as well, because you've actually had quite a lot of conversation with a new mortgage broker.
Ooh.
And because we've got quite a few properties that, because we bought so many in a really short space of time, that means we've got lots of mortgages that then, so not only did we have new applications, oh my God, that was hellish. I think we had 5 on the go at once.
Yeah,
we've now got that same 5 come up for remortgage. So conversations that you've been having with a mortgage broker recently, and he's brand new to us as well.
Well, there's 2 brokers I've spoken to, because one, we're doing a product switch, aren't we, on our service accommodation?
Yeah.
And that broker basically has locked us into obviously the best deal there is at the moment, but did state categorically that they're expecting a decrease in the rates. So they're expecting the Bank of England, I don't know, August, I think they're reviewing again. But what's gone on over the last couple of days, I'm not convinced they're going to cut the rates, but I remain optimistic.
Fingers crossed.
Because that was a knock-on effect to our mortgage rates, obviously. But I don't want to get political, but it's a bit of a sham at the moment, isn't it? So interest rate cut marginally from a mortgage point of view.
Okay.
Hopefully from a base rate point of view, but not optimistic, I'm afraid.
And well, how have you found the interest rates actually with the refinances that we're doing? Well, I know one of them, the one that we've just done, we did this product switch on, flipping heck. Is
gone
all I
up.
can say.
It's gone up £300 a month.
Yeah, yeah, that's a lot of money.
It is a lot of money.
And the one, it's the fees actually, isn't it? The fees seem, do you know, have
Well,
they
I mean,
really gone up?
come on. If you're in the game and you know what you're doing, you if you look at the cost from start to finish, you either get a lower rate and a higher fee, or a higher rate and a lower fee, and you within a little at the end of the term, they're going to be close to much the
They
same
are,
money.
yeah.
It's just what suits you at the time. Do you want a bit more cash flow? So you add a fee on the end of the mortgage, or do you want the you know lowest fee, slightly higher rate, and then a little bit cash flow every month. So
Definitely with mortgages, you've got to have that the end in mind, not like the 25-year end in
no,
mind,
the
but
end
the
of
end of the discounted period, the fixed term. We've got one that we've got up for sale, which at the time of remortgage, we knew we were going to get rid of the tenant and put it up for sale. So we just did a 1-year mortgage on it, because then there's no early redemption fees. Then we've done the product switch on another one, so we didn't have to go through a brand new application. And then this one that we're
this
doing
brand new one,
right
yeah.
now, this is brand new, this is unencumbered, so we're pulling all the money out of it.
Well, actually, we're not. We're only going for about 65%.
Yeah, but we're pulling money
Yeah.
out, so we can then reinvest it rather than having all that money tied up. And then we've had to think about, really, we wanted to recoup some of the spends on it, didn't we? So cash flow, we're thinking about cash flow plus capital growth as well. So 5 years for us seemed to be
So on that, I
right
think what we've got,
product.
we haven't actually made a final decision, but I think our option will be probably lower rate, bigger fee, and then the capital growth over the 5 years will eat up the fee.
Yeah, and then we'll get bigger cash
Bigger
flow
cash flow. That's
from it as
our
well.
mindset. Yeah.
Yeah. So really, you want to not think about mortgages as, how does it fit your situation right now? How long do you, what is your plan really at the end of that term? 2 years, 5 years? So do you think you're going to have capital growth? Probably not in 2 years, the way it is at the moment. But you'll also have that cash flow as well. So do you want greater cash flow right now, or is it pulling like all the money, as much money as you can, out to finance another project? These are the considerations you have to make. Yeah, so it's just that like deep dive, and the more experience you get as well, you have more of an understanding of the effects. So I know that we didn't really think that hard, I don't think, when we were first sort of getting all the mortgages on these properties. I don't think we thought that hard
No, I think
about
that's
it.
probably somewhere we fell down there a little bit. We sort of focused on now rather than where we're going to be in 2 or 5 year
Yeah,
terms.
but you've
Depending,
got experience.
it's all learning, yeah. But that's what you learn as you grow in business, isn't it? And you learn of other people's experiences, and yes, it's growth all the time, isn't it?
Yeah, absolutely. And then so we've got properties that potentially can be on the market for 6 months.
Yep.
Do we know
Not
if
potentially, they are.
Oh, they are.
Yep.
Okay, there's evidence of that. So properties taking 6 months to sell. What about completions, the conveyancing? Do we know if that's slowed up?
Well, with less house sales, it should speed up because the conveyancing solicitor should have more time to focus. But it's like they always blame the other end. But unfortunately, it used to be sort of maximum 12 weeks, didn't it? We're looking at 16 to 20 now to get conveyancing through, which I just can't understand why.
My goodness. And then if we've got more mortgage products on the market as well than ever before, if there's more, so does that, in your mind, or in my mind, I'm thinking that means there's more mortgage brokers then coming to market as well. So is there more like mortgage businesses out
Not
there?
necessarily brokers.
There's just more.
It's just that the funders are putting a different range of products on, I assume.
Is that trying to kickstart the rental market?
It could be starting to kickstart the buy-to-let market, yeah, definitely.
So interesting
But they're not
time.
particularly low. This is why you need, this is the benefit of having a good broker on your side. Is because if they do throw a product out there to kickstart the whole process again, we want to be on it. We want our broker to be on it and get it on,
Yeah, on
offer
the
it to
lowest
us.
rate.
Yeah.
So if you've got any questions you want us to answer,
I mean,
obviously we're not financial advisors,
no, we're not. No.
but if you need help with something, like then we can obviously, pass your details on to the relevant person. This is just
Yeah.
purely from our experience, just from us being in sort of investing in property for 7 years now. And we just in the short time of 7 years, we have seen a lot of changes, and I think it will continue to change.
And
But
this is important because the mindset seems to be that this is the strategy that works in this area. But it may have worked 5 years ago in that area, it doesn't mean it does today. So you need to keep an eye on what it's ever evolving, everything moves on, changes, and ultimately everything goes in cycles. So it might work today. I mean, let's use rent to SA as an example. 18 months ago and before, it was the strategy, and it was fairly easy to implement, easy to get across the line, and great cash flow. But that cash flow, because of rising rents, rising utility, that's just been, it's been squashed. There's nothing left now.
Yeah, there is a lot of hike. I mean, not to say that SA doesn't work, but you've got to be very, I think, more selective in the area.
Absolutely. It's not as easy, that's all I'm saying. It's still there, but you've got to work harder for it.
So I'm just going to touch on that subject actually. Holidays in the UK seem to have picked up again.
I know. Yeah, we've got lots and lots of bookings coming in through our channel manager and our management company we've got 21 holiday lets in a seaside town, and all of a sudden there's lots and lots of activity, which is fantastic.
Is it because it's so hot here, it's making it excruciatingly hot abroad?
Well, I think this is people's holiday habits are changing because you look at Spain, Italy, and France at the moment, it's unbearable. It's up over 40 degrees, so people can't actually do anything. And as a result, I've been reading yesterday, there's quite a number of fatalities just due to heat. So people's holiday habits may well change. They might stay in this country, especially if we get what I class as sensible weather around 25, 26, 27 degrees, which is nice, isn't it? The 35 we had, whatever day it was, Monday, Tuesday.
Monday.
Was all right during the day, but at night it was just dire, wasn't it?
I was tempted to sleep outside. We've got new sunbeds. It was so comfy. I was tempted to sleep outside, sleep under the stars. But I know we've got people who are tuning in from further afield. So just let us know what the weather's like your end.
Yeah, pop it in the chat. Any questions?
Interesting. Yeah, what temperatures have you been experiencing?
Pop any questions in the chat, and we'll aim to address them while we're online. Yeah.
Cool. So if we're definitely on a buyer's market at the moment. Does it make, so thinking ahead again, flips, buy-to-lets? It's always a toss-up between a flip or a buy-to-let. So
I love this question.
So at this moment in time, obviously buying, fantastic. But then what would your advice be? I know what mine would be. I'll do it in stages. But so flips or buy-to-lets, what would you say?
Well, as seasoned professional property investors, every deal we go into, we make sure we've got two exit strategies because, the market can change so quickly, especially through duration of a flip, can't it? Because let's be honest, it will take 3 months probably to get it over the line. That's 3 months the market could be doing a bit. You've then probably got 3 to 4 months of refurb. I'm starting with a flip here. So you're now 7 months since you've agreed the purchase of that property. You then got to sell it. So let's say you sell it in the first week. You then got another 3 months, etc., of conveyancing. So you're getting up to 10, 11, nearly 12 months. There's a lot changes in 12 months. So if the market's changed, we would then and when we can't get the price we want for it because the house prices are dip, which is a risk at the moment. Obviously, we're all talking about house prices dipping. We then refinance and rent it out, retain it as our second. That's our safety, and we always look at our safety net, and we base the rental on LHA rates in that area. So that's the worst case scenario. If we can't make the money or get our money back through a sale, we'll refinance it, rent it out. Worst case scenario is LHA rates, but historically we've got more than market rent because of our refurbs, because people desire to live in them. And I think that's crucial. So I think if you're doing flips now, you've got to really buy it right, because the word is that probably prices are going to come down.
Yeah, it's going to be about selling it at speed rather than selling it at best price. I think you want to work out what your profit margins are at the start, and if it's not achievable, then definitely have a speedy second exit as well.
Yeah, I mean, we are all about getting in and out. So we could say, let's use a scenario. We could say hold out for 250,000, but if we put market it for 240, it'll go overnight. So that's what we do, because ultimately you're going to take an offer anyway, generally. So ours is in and out, and if it sits on the market longer, it's only costing you in cost of money, isn't it? It's costing you more money. So we get in, get out.
This is the thing, it's thinking about the holding cost.
Don't get greedy.
Yeah, and having a really good estate agent as well.
Did I see a question?
Yes, there was. So the 2-year or 5-year mortgage.
Is this the question?
Yeah.
Okay.
And your choice and why. So would you go for a 2-year? Would you go for a 5-year?
That all depends on the future plan with the property, because if we've got one or two that we're considering selling, so we'd probably go on a 2-year product, so they haven't got all the big early redemption fees. But will the market have changed that much in 2 years? This thing. So that's driven us on this latest one where we're pulling our cash out to go for 5 years, because we believe that we've gone through the cycle by then of any recession, and we'll be going out the other side, and the prices will be going up. So we'll be on the right side. I mean, we're never going to be in negative equity because we're not borrowing the maximum loan to value, so we're safe there. But our plan on that one is to sell it in 5 years. And we're borrowing, 65% loan to value roughly. So whatever happens, the sale price will pay that off. It's just a matter of how much more money we make from it, isn't it?
I think that's a great tip as well, is if you are refinancing, so if you've already, like a mortgage product, a fixed term is coming to an end, is it wise to capital raise off the back of a refinance? Sometimes not. Sometimes you want to just keep it at the same amount and let the capital appreciation grow, so then your equity becomes bigger and your cash flow from the rent increases. So you're giving yourself a pay rise every time that you're actually refinancing, rather than keep scraping every single penny that you can. And that's actually, when there is a downturn, that's when people get into trouble, because they're leveraged to the max, rather than let the property naturally reduce its loan to value. So these are the things you need to think about. So there's no cut and dried answer. It is about what would your plan be in the 2 or the 5 years. Also the cash flow. What's important to you right now? Is it to pull money out? Is it cash flow? So really think about what the market's doing as well.
Just caveat that if we had no intention of ever selling anything, I'd go 5-year product every time.
Yeah.
Because the cost to remortgage is ridiculous. And
the time it takes. Well, I thought, oh my goodness, if you've got a whole portfolio, then 10, 20, 30 properties, do you want to be
so if you're looking at the long-term game and you're going to keep them 10, 15, 20 years, 5-year product every time.
Yeah. Yeah, and don't take any more money out than what you've spent on it, is my advice as well.
Unless you're very good at predictions and you think, oh, I'll take a 2-year product in 2 years' time, the money will be at 1%.
That will never happen
No.
ever again. So yeah, flips. Flips still going to be great, but be realistic, I think. It's like to underestimate its
Be
final value.
very
Yeah.
conservative,
And go for speed rather
you
than just
make
price.
your money when you buy it.
Definitely. And from your experience or our experience, and through having conversations with other people, mistakes that can be made on the flip strategy.
The flip strategy, one of the biggest mistakes currently is people are underestimating the refurb costs because they're potentially looking at a deal they did a year ago, 18 months, 2 years ago, and they've just changed dramatically. Stuff we were doing for 30,000 a year 2 years ago is now 40,000. It's that much. So we're talking 25% increase. So you need to be really, really careful. Obviously, you also want to factor into anything, really, especially if not a flip, but if you're doing a buy, refurbish, refinance, you need to look at the EPC. So you're going to have to spend a bit more money trying to get that rating up with your insulation, your windows, your cavity wall, whatever it takes, your LED lighting, heating system. So you want to factor that in, especially if you're in the long game, because you want to get the best EPC rating you can. So that adds additional costs. So that is the mistake people make. Having said that, if you flip one and you've got a good EPC, potentially the mortgage company is going to be favourable, so they'll give you a better rate if you've got an EPC C and above. So that's a good selling point. But yeah.
So just costs.
Well,
having it right
and
understanding costs.
one of the biggest things we hear is, "Oh, can't offer that low." Oh, I can't offer that. So my answer is, where does it work for your business? Yeah, it works there. Well, that's your offer then.
Much.
Yeah. You're running a business. You're not a charity. You're not, and you're solving problems. Most of the properties we go for are needing 40,000 spent on it, or they're unmortgageable, cash only. So we're solving a problem because the buyer for those is such small, so few people that we are the problem solvers. So that's what you got to see yourself as, isn't it?
Yeah, definitely. We are, we are solution providers.
Yes.
And I've got some more questions here actually about, so we just launched an amazing NAB and Investor product.
Yeah, get on that. It's fantastic.
Yeah, so
although I've all my own work.
Yeah, I'm going to take all the glory for this. So we're running that challenge again on the, oh my goodness, on the 14th of July. I'm going to say the 14th.
Well, it's the Monday after the online networking.
Check that date. But it is great. So lots of talk about private finance and the fear as well of raising finance, which really stops people in the tracks. What day?
NAB Investor is 14th, 16th, 18th. It's
Lovely.
7 o'clock on those 3 evenings. So it's a Monday, Wednesday, Friday.
Yeah, but it starts on the 14th.
Starts on the 14th.
And there's 3 sessions.
3 sessions. 14th, 16th, 18th.
So you have to come to each session, is what Neil's saying.
Yeah.
And it makes it the whole challenge. Yeah. So fear is big when it comes to raising money. And also if you're buying, we'll still talk about flips. So using private investors' money for flips, I think that's just, even though it's easier to buy a house in cash because obviously you haven't got a mortgage company, what you don't get, so one of maybe the downsides to using cash to buy a flip would be that with a mortgage company, they survey the property, they underwrite
Can't use a
it.
mortgage for a flip.
Or borrowing money from a financial institution. They will
Hedging.
they will survey the property. You'll have a RICS surveyor go out. So there's that extra stage of reassurance of whether the property is worth the money that you're wanting to pay it for. But with cash, you don't have that. So you want to be just really, really careful about your numbers. And also get your searches done as well, because when buying cash, you have the choice whether to have searches done or not. But again, thinking of your exit, that you're selling this property, if you don't get those searches done, and then the person buying gets the searches done, which is inevitable, which you're sort of 99% sure that it's going to be a mortgage purchase, and then something's highlighted on those searches, then that could have scuppered your whole plan. So you need to treat a cash purchase exactly the same. So the same backup, get a RICS valuation done on it if you're inexperienced. I mean, we've got build teams now and our own experience as well. We can see stuff that probably we wouldn't have noticed when we first started investing in property. So make sure you get that backup. Make sure you get a RICS survey around, get their opinion on on what the value is going to be, because they're going to be looking at what's happening in the current market. They're going to have
and also
a professional element of what's driving the market.
And also picking up on that is there's a lot of talk about down valuations currently. So again, that might sort of play into your hands of putting an even lower offer in if you feel that's necessary, rather than walking away, renegotiate and say, look, this is what it's come back with. I need to renegotiate here.
And then you have
and if you've got it in black and white, from a professional body, it's going to carry some clout with the vendor. So
yes, so definitely get that professional backup if you are buying totally in cash.
Yeah.
So definitely get a RICS survey around, get them to value the property, and do all the things like as if it was going to have a mortgage on it. Get all the same things, but obviously it's just easier. Cash is definitely quicker. I don't know about we haven't had any searches done for a little while, have we? So I don't know how long they're taking, but they're like a few weeks, aren't they, to get those done? So yeah, it will still be quicker, but just make sure you've got that professional backup. So that's a question about private finance. And then just the fear. How do you alleviate that fear of raising finance, full stop? Because it really stops people. It really, I think, stops people going forward and even putting not
biggest thing on. Yeah, that is the biggest blocker out there. And let's not dress it up. We had the same thoughts. Who's going to lend money to us when we first started? No experience, don't know what we're doing. But what you've got to do is leverage your life experience and your employment history to back up that you're the right person, the right fit for their money, and ultimately do stuff in a professional manner and let the numbers do the talking. If the numbers are right, if the deal's right, the money will come, and I'm a firm believer of that. And I can back that up with having got 3 offers accepted in 48 hours and no money to buy them, but we bought them all because the numbers worked so well that people wanted to get involved. So you've just got to have that self-belief that I can do this.
Definitely. And if
you've just got to go at it head on.
And if you've got professional backup as well, say that you've decided to get mentors like Neil and I on board to help you run the numbers, so you really understand the numbers. You've got a RICS surveyor who said, I believe that this property is valued at this, because if you have one of their reports, like a home buyer's report, my goodness, depending on what level we go through, they're going to highlight all sorts of things. So you'll have a really good, record of what repairs need to be done.
Have a good negotiation tool.
Yeah, a great build team as well that has priced it up as well. So you've got all these, professional backup. Then, as Neil was saying, the numbers really will do the talking, and then you've just got to have that confidence that
present it in the right way, basically.
Yeah. And it's all relationship
talk with
building.
Confidence, present it the right way. Yeah,
definitely.
The money will come.
100%.
Because there's always the argument: money first or property first. We talk, we do both at the same time, but it doesn't mean you secured the money. But yeah, if the deal's right, then we go looking for the money, and we've never failed yet.
That is the thing. It's like when you have the deal, that is not the time to go looking for the money. As in, you want to start looking for the money, start telling people that you're in the market.
Yeah.
That's what I mean. So you want to already have a bank of people that you've already spoken to and told them what your intentions are. And also you need to have figured out what sort of money that you're after as well.
Yeah. There's a whole lot of steps which are more far bigger thing than this.
Yeah. But it's about looking for it in advance or having started those conversations in advance because,
TTP, it's all you got to do.
talk to people.
Talk to people. Just tell them all what you're doing.
But yeah,
Get the intrigue going.
yeah. Or you come on Nab an Investor and
Yeah,
then we'll teach you how to do it.
Tenuous link. There you go. What about that?
Way to do
It's
it.
almost planned, isn't it?
I know. And if you get on early as well, then you're going to have it at a super duper price. You can either buy the toolkit, just buy the docs, buy the worksheet all by itself, or you can come on the challenge as well. It's really great. I love it. Yeah, so things that are coming up. So we have got our online networking event, which is next Wednesday
next
at
Wednesday.
1 p.m. There will be a link on the YouTube channel in the description, or you can just go to moneytreemastery.com/networking-online.
Well done. Well done.
I know.
Boom.
It is a lot of fun. We play games. So we're basically bringing in-person networking where you have that proper human connection. We're bringing it online into a Zoom room. You're going to have proper chats with people. You're going to have fun. You're actually going to talk to people. You may find people that you want to collaborate with. You may find someone's got a deal that they want to sell on. You might find that someone's got some money and they need something to use it for.
What you will have is opportunity to have meaningful conversations in breakout rooms. So it's not a free-for-all.
No. So it will have some structure,
Yeah.
but we're putting the fun element, the in-person element into Zoom networking.
We have played
Don't tell them the whole format.
No.
I'm surprised.
But we have played Guess Who on a couple of occasions, and you'll be amazed how many people have never played Guess Who in your life, and it's
really
absolute carnage.
And I will just say, Richard from Guess Who.
Richard, here I am. Yeah, he's got a bit grey though.
If you have never experienced Guess Who, that was my favourite game as a child, and it does. I'm going to say it does work really well over Zoom.
It does.
It's very funny. Yeah, but it's just a great space. It is about meeting people, not just sitting behind a screen listening like you are today, because obviously this is a podcast recording. But it is about actually interacting, meeting people, and we're trying to bring the elements that are missing from the online networking into a Zoom room. Yeah, so you will have the opportunity to actually speak one-on-one with people, and you never know what relationships will develop out of coming to our networking. So it's property clarity and connections. It will be on Wednesday at 1 p.m. So go to moneytreemastery.com/networking-online.
Boom.
Done it.
Hope the link worked.
So register, you'll get an email with the Zoom link. You also get the opportunity as well. There will be an invitation to join the Moneytree Mastery Property Networking Hub as well. So yeah, another networking opportunity. We're just looking to grow community.
So many opportunities to collaborate.
Oh my
joint
goodness.
ventures, funders, everything out there at the moment.
We've met business partners, people that have brought us money, property deals, all sorts of things, all through networking. Our power team, so our solicitors, our insurance broker, mortgage broker, all sorts of people through networking events. So it is just an amazing space to be. And yeah, if you join Nab and Invest as well, another community of people, and yeah, we'll teach you how to network. like in a really proper professional way as well on that as well. Not just about raising money, about forging relationships as well. And yeah, so all good stuff. Right, we have a few questions. See if there's any more in the chat. Oh, swapping lenders on existing property. Does the new lender commission a survey?
More than likely. I mean, a new lender means a whole new application, so you have to go through the whole painful process. So what you want to do is weigh up the difference between a product switch and a new lender. Quite often, I mean, I've done product switches myself with the mortgage works online. So you eliminate all your broker fees and everything, and it's very swift. And I have to say, the rates were fantastic. So I would get your broker to weigh up the two options and see what's best, because you might be just as well to stay on the existing lender and just do a product switch, because the rates will probably be very, very similar.
Yeah, and no additional broker fee.
And you don't generally have any solicitors fees,
Survey.
or anything like that. No valuations. They just take it from the historic one that they've done previously.
Oh, they do desktop research as well, don't they? As well.
Yeah, I mean, product switch, I don't think they even do that.
They just make sure that it will cover the current loan.
Yeah.
So yeah, so if you're going for a brand new product, they will obviously do
full application.
Yeah, it's a full application. So they'll be looking at your financial report. Then they'll be doing a survey on the property as well. But one, to make sure it's valued, the value is what you say it is. Yeah, so it is a full application going with a brand new lender compared with a product switch, which is sticking with the same lender. They won't do capital creation with a product switch. It is just literally like for like, but different rate. So yeah.
Yeah, so you're remortgaging the existing loan, basically.
Yeah. So great question. Thank you for that. Okay, that's
Look at both options. Get your broker to see, because there may be so little between them, and then when you add the additional costs on changing lenders, you might do just as well sticking with the original one.
Yeah. So great session. Thank you so much for joining us. I know it's been amazing. Thank you for your interaction as well. We just bring you the information as we find it. We're doing this every day. We will continue to grow our property portfolio. We'll continue to pivot and switch as the market sort of dictates, really. It's never a singular sort of linear process with property. It is always about ducking and diving, seeing what's working at the time, how we can maximize our profits and be solution providers as well. So
the really good news is I've done 5 viewings this week. I've made 5 offers and they've all been rejected.
So that's
which to me is really good news, because if I got a yes first time, I'd start questioning myself whether I'd offered too much. So I always go for no first time. So I'm really happy.
Amazing. Any questions before we go?
That's it. Fantastic.
Brilliant.
Thank you.
Thanks for tuning in. Been a pleasure as always.
Amazing. If you want to catch up with us, then please do so through YouTube, or you can find us on Facebook on the Dobson's Property Adventures, or just come to one of our events. It'd be amazing. Lovely to see you, and we will see you again next week.
This time next week.
Yeah. See you all.
Bye.
Cheers.